Hello everybody. So this video is entitled 4 AI stocks, are they too cheap? And I am talking about mostly three very big names today, right? Nvidia, Meta, and Micron. I find these to be rightly priced, if not cheap, especially for Micron. I'll get to that in a second. And then I added back Nebius to a list of potentially a too cheap stock because Nebius is finally having a pullback. As you know, Nebius, this is a stock on this channel. We started covering it in the 2026 to like 50 all the way to 100, and then it got out of hand. There's slightly a pullback for Nebius, so I like that. I like to see that. So let's get started. Again, this is a quick overview of these stocks. So I don't want to go into all of the details. Many of these stocks, even a 1 hour video wouldn't do them justice. So let's get started with Nvidia and let's just look at the valuation. So Nvidia, the famous number that Jensen said is that they could have $500 billion in revenue within the next 5 quarters. That was something that he said 2 quarters ago or something like that. I'm using a revenue growth number of 62% next 12 months revenue growth number in there. I think this could be actually much higher than that given Jensen's own forecast. But using 62 number, which is the analyst number, I get an enterprise value over gross profit over revenue growth of a 0.4. This is still, to this day, the cheapest Mag 7 that I cover in the channel, slightly cheaper than Meta even, and the rule of 40 is squarely above 100 at 127. And of course, Nvidia is the king of AI. They're the one that started this entire revolution. I'll note they kind of run a VC business, and so many companies in the sector got $2 billion from Nvidia. So you get access to a whole bunch of companies that are 5x'd, 7x'd, where Nvidia just invested early $2 billion. They've been taking that cash, reinvesting it in the ecosystem, in those companies that are going to be important to the ecosystem. And I could select a lot of slides in their presentation. Of course, they have CUDA. CUDA is the main platform on which a lot of these AI models is built. But the one platform slide that I'll take from their slide to illustrate the insane growth that they have coming is that, we're in 2026, right? And we are going to move in 2028 towards their Feynman platform. And if you think about orders of magnitude, we're going to see multiple orders of magnitude improvement towards the second half of the 2020s, right? Towards the 28, the 29, the 2030, this stock could have GPUs that are much more powerful and much more unavoidable and well ahead of the competition. And when I look at their Feynman platform, when I look at some of the many inspirational presentation that Jensen makes, about twice a year, he makes a GTC. Well, GTC is once a year, but he makes multiple presentations twice a year. It's just absolutely outstanding. Of course, these videos are more technical. I cover all sorts of channels, so all sorts of stocks. So I don't pretend to really go into the weeds and the detail. But when I look at Nvidia stock, when I look at the fact that it was trading even higher in October of 2025. When I look at a stock like Nvidia, I see that it hasn't moved very much in nearly 10 months, maybe less than that, but it has barely moved. And I don't understand it. To me, this should be a $280, $270 stock. We're still sitting at 200. The market seems to be chasing the new shiny AI stocks, the quote unquote stocks that could potentially 5x or 10x, but I'm not so sure these stocks are that easy to spot. And Nvidia, of course, is in my view a no-brainer at this price. I find it cheap. It's the cheapest Mag 7, and it's a bet on the AI ecosystem and the AI economy continuing to grow. And they are the absolute leader, and they haven't really run. So I like Nvidia very much at this price. Let's talk about Meta now. So I've been covering Meta a few times in the past month, I guess, on this channel, because I like what Meta is doing. I like two things about Meta. First of all, I like that they're investing in AI, and I think it's a big deal, of course, when they said that they would become a hyperscaler and they would start selling excess capacity into the market to other companies as they scale, and if they can. And so, it's not even a guarantee that they'll have excess capacity, by the way, because if you listen to the call, Mark Zuckerberg was saying they are using everything they got right now for their own internal business, whether it is making ads more addictive, making apps more addictive, creating tools, providing tools for creators. So they're using all of their AI, but they're open to selling extra AI to third-party hyperscalers. And just the fact that they're open to do that made the stock pop. But if you look at even better than that is they're getting into AI coding, and so that was the news yesterday. Of course, they're getting into AI coding, jumping into the bandwagon along with chasing Anthropic and OpenAI, and people seem to dismiss Meta's efforts in AI, but they forget that two years ago Llama 3 was a top AI. Like they have been at the top of the AI race in their day. It's a little old now, but they could make a comeback. At least that is my take on this, and the more important thing to me is that Meta does not need AI to do well. And I'll conclude with this on Meta. I love absolutely their Plus program, their Instagram Plus, Facebook Plus, and especially, of course, there's WhatsApp Plus, but Instagram Plus is the one that I like the most. This is exactly what YouTube Premium has done. YouTube used to be great. Okay, and then they started making YouTube unbearable with the ads, and now you are in a situation where everybody has YouTube Premium. I'm exaggerating, but a lot of power users of YouTube are paying, is it $17 or $18 a month for YouTube Premium now? So I see the same thing happening to users of Instagram. Maybe the ads of on Instagram will become so good. Maybe the apps will become so addictive on there. That the feed may become very well unbearable unless you pay $3.99 a month. And if they make it unbearable and people have no choice but to pay $3.99 a month, look at the family of apps that they have. More than 4 billion people subscribe to their various apps. If they all pay just $2 or $3, and then you raise the prices of that, you have a company that could turn from an advertising giant to a recurring revenue giant. And of course, if you use X, and if you pay for X Premium to access to Grok, you may understand how a Meta Premium subscription, or Meta Plus as they call it, could be very compelling if they include AI tools in there, AI creator tools that you can't really get anywhere else, because perhaps they are connected to your Instagram, and perhaps they can help you make more viral posts and viral things. So I like this company very much. I do not understand why it got so cheap. Of course, it has not gone anywhere. Keep in mind, this was an $800 stock. What was it, in September of last year or something like that? So I find the stock cheap, and it's the second cheapest in my spreadsheet after Nvidia. Can you believe that? It's the second cheapest after Nvidia. It's crazy to think that Nvidia, when I calculate the numbers, Nvidia looks cheaper than Meta still. It's pretty crazy to think, but EV or GP over RG is a 0.42, a rule of 40 is 73. So I like Meta very much right here. It ran a little bit, these things tend to mean revert, so maybe I would wait until it gets back to 600 and change, because it ran a little bit, but this is nitpicking. I think over the long run, this company has a lot to offer. Moving on to Micron. I have not done my full analysis on Micron, but I've run the numbers. Micron is very, very much dirt cheap. And what makes it uncomfortable for me with Micron is that it's 5 to 6x in next to no time. In if you go back, was it 1 year? So year to date, of course, it's a 3x, but was it 1 year? In 1 year, it's 5 to 6x. So even more than that, right? Depending on where you look. So of course, it annoys me. And I think assets mean revert in the short term. But the question I'm beginning to ask is, has that happened to Micron? Has Micron mean reverted a little bit under $1,000, which is a big psychological threshold? Remember, this stock was $1,200 not that long ago. I mean, it was namely $1,200 in late June of this year. And so it gives me pause, of course, because the next big stage of AI is these AI agents, AI models remembering everything that you've discussed with them. Of course, humanoid robots could need, I've read reports, more than 10 times the memory than say, a regular computer or regular electronics need, like 10 times as much memory. Because if humanoids become a thing, they will need to have long-term memory. They will need to have some sort of memory. And of course, for Micron, it's high bandwidth memory, which is perhaps a more direct application of the thesis, which is the next GPUs that are coming out need some things like 8 times as many high bandwidth memories than the former GPUs needed, or something like that. So absolutely insane. And I'll just quote this Yahoo Finance article right here. And this is, I think, a very striking quote. Micron's 1.2 trillion market cap is roughly 1/3 of Nvidia's. That's true, right? And it posted comparable revenue and profit figures. So it's 3 times cheaper, but posted comparable revenue and profit figures. And of course, what do you see in my spreadsheet? I rate it at a 0.15, right? It's I find it as a little more than 3 times cheaper. I find Micron a little more than 3 times cheaper than Nvidia. So I think the market is very, very uncomfortable giving Micron a high valuation, of course, because it used to be a very cyclical business, and there are risks, of course, to memory. I think the big risk is what if there's new AI models that find new ways to compute memory, that find new ways to handle memory, and we have lesser memory needs. That could be a risk factor. But then again, the demand for AI is so strong that even if you get a new model, that may not impact Micron, because Micron signed something like 5-year deals with 17 different companies, with cash upfront type of deals, which is if you take the merchandiser or if you don't take it, they keep the cash. They signed very advantageous deals. Micron may be very well moving from a cyclical business to a I don't want to say recurring revenue business, but almost like that, because of these 5-year deals that they've announced at the last call. So of course Micron is going to mean revert a little bit. We are in that phase. Let's wait and see. But in my view, this stock is definitely going higher, at least in my view, because it's too cheap, and the rule of 40 is insane at 187. It's insane. So I like Micron under 1,000. I would like to see it go cheaper for me to step in. I would like maybe 800 or something. But of course, I'm nitpicking here. This is becoming interesting. This pullback is becoming interesting. Well, of course, Meta bounced back, but Nvidia had a little bit of a pullback. Micron definitely had a pullback. These pullbacks are getting interesting. We're getting a gift, I guess, in the early month of July. And lastly, Nebius. Let's talk about Nebius. Nebius is down some odd 30%, depending on when you look at it. Okay, it bounced back a little bit yesterday, so it's down like 25%. But I like Nebius at 216 or 210 if you were lucky to get it there. Much more than I like it at 280 or 290. To me, this is a 30% difference. And it starts to make a difference. A 30% difference starts to make a difference. Let's remember that Nebius has an enormous backlog. It's namely a $49 billion backlog. This is a $46 billion company. They have a $49 billion backlog, including Meta. And you see Meta saying they can't get enough compute and they're still reinvesting in compute. Well, Meta is a client of Nebius. And they're going to also be an hyperscaler. Microsoft, right? Microsoft, enormous clients of Nebius. And Nebius got an investment from Nvidia in the early days, and they have a privileged relationship with Nvidia, where they're the first to get the chips. At least they've been the first to get the chips. And I like Nebius very much just on these numbers. And my valuation right here only takes these numbers, and so I get a 0.17. So about the same level of cheap as Micron. By the way, I didn't put CoreWeave in there, but Nebius is now cheaper than CoreWeave by like 20%. So it's now cheaper than CoreWeave. I need to add IREN and analyze IREN again in my spreadsheet. But this stock, if it got back to like a 0.15, 0.14, it'd be a cozy number. And of course, forward revenue of 600%. That's what I put in there. Could be more. Could be more. The problem is that it's so early. We don't really know exactly when they're going to recognize revenues from all of these deals. So for these companies who are still early and investing so heavily, maybe using the backlog is a better number. But if you use the backlog, you can't really use my spreadsheet. What I'll conclude about Nebius and the videos that I made in the early days about Nebius, which made me really, really like Nebius in the early days, was their stake in ClickHouse, 28%. So if you follow ClickHouse, many people speak of ClickHouse as a next generation Databricks, or kind of a next generation Snowflake. What if ClickHouse IPOs at, I don't know, dare I say $50 billion? What if we were to IPO at that, for example, maybe in 28 or in 2027, right? Nebius owns 28% of ClickHouse. This is, to me, a very big deal, and it's being slept on in the market. And of course, the origin story as to why they own ClickHouse is because Nebius was a quote-unquote spin-off. It's not exactly a spin-off, but the founders were involved with Yandex, and Yandex was the Google of Russia, and they left Russia, and they founded Nebius. So they have a long history of being a big tech company, which the management team is perhaps also another thing that Nebius perhaps deserves a premium for. This stock has performed stellarly over the past 2 years, and the pullback, I think, is healthy. If only we could get just below 200. This pullback has been nice. This pullback has been pretty nice for people who want to get into the AI train and who may have missed it, right? So anyways, this is what I think. This was not investment advice. This is not financial advice ever on this channel. This is only entertainment. I'm hoping you are entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.